Okay, good afternoon, everyone. So Mkango is focused on a rare earths project in Malawi. We've been working in Malawi for about 12 years, and we've taken a project from a very early stage through to an advanced stage, a pre-feasibility study, which we put out in 2015. Recently, we attracted a strategic investor. They invested £6 million in January, which is funding the initial phases of the feasibility study. And they'll invest a further £7 million in probably first quarter next year once we put out an updated resource. We just completed a major drilling program, 10,900 meters. That's an infill drilling program. And we've announced around 16 of around 90 drill holes, so we'll have those results coming out over the next few weeks, and that'll culminate in an updated resource. So we have a pathway to production in that same strategic partner has an option to develop the mine, so they can increase their interest to 75% by funding the equity to develop the mine, which will be around 100 million, and arrange the project finance. So ultimately, we would retain a 25% free carried interest in a producing rare earth mine. We're working in Malawi, which is known as the warm heart of Africa. It's one of the best jurisdictions to be working in Africa. We have very good infrastructure. There's a new railway line which passes through the south of the country, which is really unlocking the potential of the country. So there's a very good road network, and there's also power developments as well. So great place to be working. We also have a very strong focus on sustainable development and CSR. It's integral to the vision of the company, and we are leaders in Malawi in terms of that side of things, and we've done a large number of projects in CSR, very good relationships with the government and local communities. And that's really key to the success of any exploration mining development. We're one of the very few advanced stage rare earth projects globally. There was a speculative boom in the rare earth sector, sort of 2010, 2011, and of the 200 or more rare earth exploration companies which were around at that time, there's now very few surviving companies, of which we are one. So we are very well positioned as the rare earth sector recovers, which will be driven by electric vehicles. So most electric vehicles use permanent magnet motors, and rare earths are used in those permanent magnets. So each electric vehicle uses around a kilogram of rare earths. And if we assume a sort of tenfold increase in electric vehicles on the road over the next 10 years, that equates to a doubling of demand for neodymium, which is a rare earth used in these magnets. So we expect a significant supply-demand shortfall. And as I mentioned earlier, there's very few companies who are positioned and have the finance to fill that supply-demand gap. The EU recognized that sort of the critical nature of rare earths, and they highlighted rare earths, neodymium, praseodymium, dysprosium, even above lithium and cobalt in terms of their sort of critical nature for clean technology in electric vehicles and wind turbines. So the deal with Tiaxis, we announced this in November last year. Tiaxis are a subsidiary of Noble Group, which has a very substantial network throughout Asia, and we're really leveraging off that network. It's a new vehicle set up by Noble to invest in clean tech metals, so rare earths, cobalt and lithium, and Mkango and our project is their first investment. So they're funding £12 million in total for 49% of the project, so they're investing at the asset level. And that comes in tranches. So the first tranche, 6 million, earned them 20% of the asset, and we received that in January. Further 7 million pounds takes that interest up to 49%. That'll come early next year following the resource update. And as I mentioned before, they have an option to develop the mine in return for offtake and additional interest in the project. We also set up a new subsidiary focused on downstream technologies called Magneto. So we have an agreement with a group called Metallicis in the UK, who have a technology to make specialty rare earth alloys. So Tiaxis are also funding that. They invested £1 million into that subsidiary also in January. So the structure is as follows: 2 subsidiaries, Magneto focused on downstream, Lancaster focused on the upstream, and development of the Songwe Hill rare earths project. In terms of the capital structure, we're about a £10 million company. We're dual listed on AIM and on the TSXV. We've got working capital of 6.3 million US as at June 2018. In terms of the major shareholders, Tiaxis is a 13% shareholder. They also invest in the top company. We have Resoc, which is a UK specialist fund, holds 12%. Leominex is a management vehicle. Myself and the other executive director, Alex Lemon, we held our interest through Leominex. And then Richard Sneller recently took a 5% stake in the business. He runs emerging markets at Baillie Gifford in the UK. So we're very pleased to have him in as a personal investor. And then we've got a number of other funds and other and retail and high net worth private clients as investors. In terms of the management team, it's run by myself and with the co-founders, myself and Alex Lemon. We both have a geology background. I worked in investment banking and also for Rio Tinto. Alex Lemon ran a gold mining operation in Central Asia, a lot of experience in working in emerging markets, dealing with governments. We recently restructured the board as we moved towards development. So we brought on Susan Muir, who's ex-investor relations for Barrick. So she's spearheading our investor relations effort in North America. We also brought on Sandra de Toy. She's Johannesburg-based, and she has arranged finance for a number of mining projects throughout Southern Africa. She's currently with Standard Bank. And Sean Tracy, who's Chief Investment Officer with Arete Capital, which is Hugh Morgan's private equity group. He's based in Sydney, Australia. We also have Adrian Reynolds, who's part of the executive team for Randgold, one of Africa's major success stories, and also Derek Linfield, who's got he's a lawyer, very good African network. In terms of the project itself, we're in Malawi. It's a very stable country. It's the infrastructure unlocking development potential. We've been working there for 12 years. Never had any issues there, and as I say, it's one of the best jurisdictions to be working in Africa, and we're getting a huge amount of support from the government. And this railway line will unlock the mineral potential and certainly the rare earths potential of this part of the country. In terms of the infrastructure, it's probably difficult to see this slide, but we're about an hour and 3/4 drive from Blantyre, which is the major commercial center of Malawi. There's an international airport and a paved road to within 10 kilometers of the site. So really good infrastructure. And the last 10 k's is a sort of a gravel dirt road, so makes life very, very easy in terms of exploration. In terms of the development model, we'll be bringing in reagents to process the rare earths in Malawi, and infrastructure is key for rare earths, so that gives us a big competitive advantage. Project will be open pitable and straightforward mining, and we'll probably use a contract miner. In terms of the resource, 32 million ton resource. We've finished the drill program with a view to updating the inferred resource. That would add 100 million to MPV. Pre-feasibility study we put out in 2015. The MPV was around 345 million, IRR 37%. These numbers will all be updated during the bankable feasibility study, which is underway at the moment. So we're currently focused on reducing costs and increasing the efficiency of the project. So the BFS is underway, metallurgy underway in Australia and Canada, drill program finished, lots of news flow coming out with another 75 drill holes to announce, culminating in the resource update. The environmental, social, health impact assessment is also underway, very key for project development. And I mentioned the drilling program. In terms of the results of that, the main target is the infill drilling with a view to updating the inferred resource. There's two other areas, targets 2 and 3, where we have potential to expand the resource. So in terms of the milestones, drill results culminating in an updated resource, first quarter next year, £7 million investment from Tiaxis, bankable feasibility study by the end of next year. Then we go into financing and project development. Thank you very much.